What's good? What's good? What's good? It's your man Don Bucks. Welcome to another episode of Cheef in Charge, sponsored by Rapping Dough. You know, the home of money conversations and all that. We talk about all things Black wealth. But this particular series, we talk about one of the solutions, which is options trading. So, if you're in the options trade, if you're into trading, period, make sure you hit the like, subscribe, and notification bell so you know when I'm going live. So, today was a bittersweet day. I mean, mostly sweet. I mean, that's what trading is, you know what I'm saying? It's a mixture of ups and downs. So we have to really hone in on how to control those emotions. And that's going to take some time. Don't expect that to happen overnight, please. Please. But if you was tapped in yesterday, we seen what we seen. We seen what we seen. I don't like to make predictions, but I mean the nature of this show is to tell you what I see, right? So there's a thin line there. I don't want to oh yeah, and today's episode is what I'm cheap in the day. Area 51. Area 51. But yeah, so we have to manage our emotions, right? And you know, this thing, you're gonna go through stages of euphoria and then stages of so yeah, that's trading. It's trading for you. But yesterday, if you was here, he was talking about how we're seeing a momentum divergence. And it happened, it happened. But like I said, this I don't like to make predictions, but like I said, it's the nature of the show. Tell you what I see, it is what it is. Because reason being, I don't want people to get hung up on trying to be right. Like, oh man, I want to call stuff out like Don Bucks. You're going to be right sometimes, but I need y'all to know that you're going to be wrong too. But that's okay, because if y'all doing what I showed y'all how to do, which is leverage properly leverage. If a trade goes against you, you're not really bent out of shape because it's an emotional amount that you can stand to lose. So that's all you're trading anyway. Right? So let's get into this chart. Show you what happened today, y'all. So yesterday we called a momentum divergence. We seen the SPY doing what it was doing. But here, see this big green bar? That was today. So yesterday, if you was here yesterday, let me make this screen bigger. Yesterday was this red bar. And remember, we can't see everything that was going on in that bar. That represents a whole day of trading. That's a whole from 9:30 to 4 of trading. So if you see a red bar, untrained eye would think it was all selling going on today. Some buying going on too. Can't really see it in this daily bar. But what we seen here was a new high in the MACD. So let me draw that new high so y'all can see what a new high in the MACD is. Some people may get that a little confused as to what a new high in the MACD looks like. So the last time it dropped and then it bounced and came up, where did the MACD register on this green bar? It registered right here, right? Let's make this bigger. This green bar right here. It dropped and then it reacted with this green bar. Where's the MACD when that happened? It's right here, right? So that's upwards momentum. It came down again, went up. Where the MACD register then here. So we can surmise that here and here are two separate inflections in the MACD in which price had went up after a downpour, right? So here it went up after a downpour, and that's what a MACD was, right here. It came down and went up again. So where's the MACD at now? It's higher. So that is a new MACD, a new high. So we go from swing to swing and register what the MACD is. If it's not a new high, it's not a new high. So this is the new high on the MACD. So yesterday on this bar, we said we're going to enter. This is the daily chart. We're entering on weakness in this MACD strength. We're waiting for a pullback. And that's what we seen yesterday here on this bar. Red bar, strength, upwards momentum in the MACD down here at the bottom. See this? New high in the MACD, weakness. That's a momentum divergence. We need to be able to correctly identify the momentum divergence though. So here's a textbook momentum divergence. If you've never seen one, here it is. From downswing to upswing, we registered the MACD. Then from the next downswing to upswing, we registered that MACD. We measure it from peak to peak, where it happened at. And if there's a new high, we have a new high in the MACD. We're looking for weakness to enter. It's hard to enter on the green bar because you don't know where it's going to. The prices are all over the place when it's going up in the midst of the, you know what I'm saying? So you want to wait for a pullback, some weakness. Of course, a couple other parameters because we've seen that it was bouncing off of the Bollinger Band moving average as well, right? So we've seen that. And we see this momentum divergence. So let's go down to the trading time frame, which is the 2 hour, so we can see what's going on even closer. So where are we? Friday. Here's Thursday. Just that green bar right here, the end of the day, Thursday. So that bar, let me show y'all the bar that we're in reference to. This is today. This is the bar that we're looking at. It's going to be broken into 4 bars. So we can't see all the action in here. But if we go down to the 2 hour time frame, it's going to be broken up into 4 bars. And it's going to show you more of what's going on in that one bar. So Thursday is 1, 2, 3, 4. So these 4 bars are Thursday. So I said it's going to bounce off of this area because this is also a level in the 2 hour. These levels that you see here are daily levels. It's like I tell you on my course, if you haven't took it already, each time frame has their own levels. So once you know how to draw levels, you don't even have to draw them sometimes. You can just automatically see where price went up and stopped at. That's a little bit advanced. You'll get there. Until then, draw them. But just know which ones go with which. So you might have to label them. So this level is here in the 2 hour. Right? So you might want to label that 2 hour levels daily. levels, right? So I said, if you was here yesterday, y'all know what I said. Y'all can go back yesterday and rewatch it. I said, boom, Bollinger Band, right? Green bar, level. So it's going to bounce off this level / Bollinger Band area. That's what I said is going to happen, right? And look what happened. Lo and behold, it did just that this morning. It bounced because this 2-hour time frame is going to obey the daily. The later time frame holds precedent. If this says it's going up, the 2-hour has to obey it at some point. It has to catch up with it. Because this is what it's saying. This is where it's the direction of the market on a longer term says it's going. So once you drop down to the trading time frame, it might say something different, but it's going to be short-lived. This is why we're practicing paper trading, y'all. Get these thought processes. So new high in the MACD. Yesterday we said we're entering right here on this red bar, right? That's a momentum divergence. How much weakness is it going to show? Boom. It stopped at the end of the day. That was the weakness. So it came down. Boom. This was the end of the weakness. Right? Turned green. This is where I made my entry, but on my stock. But if you was playing the SPY, this is where you would have made your entry for calls. Right? So on my stock, we seen what the SPY was doing, and this is in opposition. This is doing what the SPY is doing, but on the opposite direction. The SPY is going up, mine is going down. So I'm positioning for puts. So yesterday, what's this? So if on the SPY it's positioning for calls, I'm positioning for puts on my stock, on our stock, should I say. So this was Thursday. We see a new low in the MACD. So we're looking for strength to enter. So we've seen that it dropped below support. Actually came back through because this is Thursday, but this is hella strength in weakness. Like, okay, you got to wait for the strength to pipe down a notch, right? So how do you know when the strength is going to run out? So this is what we're looking for, but we want to enter when it's done, right? These green bars, we're looking for this with this momentum divergence. Because look, let's do what we did to the other one. So how do you know when it's a new low in the MACD? Let's draw a trend line. So when it did this, boom, where did the MACD register? Right here, right? It went up. Uh-oh, I didn't mean to do that just yet. So if you follow my cursor, when it did this big red bar right here, the MACD registered right here. That was the low. Then on this green bar, That's the pullback. The next drop down, where did it register? Right here. That's a new low, right? Pull back, drop down again. Where did MACD register? Another new low. So every time you see some strength in this, I mean, this was some erratic strength, but if you know what you're looking at, this is these places where you would be positioning for puts. Like right here is the very extreme of the strength that we were looking for. Because we're looking for strength of momentum divergence, right? So new low in the MACD with strength is setting this up for puts. So if we go down to the trading time frame, we will see where the strength ended. Okay. So it dropped below, it's testing, broke through. But we know that on the daily, this is bullshit strength. On the daily, it says we're going down. So every time, I mean, sometimes it can test and keep going, but you have to have a level at which you're getting out, right? And this could have shook a lot of people out because sometimes the market will go past someone's stop. It'll probe past to test for stops. People's stops, where they have stop losses at. Major market movers know where stops are at. Well, typically where stops are placed, it's right beyond a level. So people will get out of a trade or their sell will trigger once it goes past a level. They know where stops are at. So sometimes the market will probe a little bit past an area to shake out weak hands, weak hand traders, right? So it'll get up here and then people will start selling. It'll trip their stop loss. So mad selling will initiate. People will get on the people that were on the wrong side of the trade now have to get on the opposite side, which is the sell side. And that's why selling happens so much faster than the uptrends a lot of times. So all of this strength shook a lot of people out. Probably shook me out. I'm probably one of them. I ain't even gonna hold you. I'm probably one of them. You feel me? So yeah, this is where the strength stopped. Because I mean, if just look at it. Is it a new high in the MACD that will have you want to get on the opposite side? Because here we're looking for strength for puts. So people were looking for a place in this strength to position. Somebody might have had, buys set up, for right here. If it kept going past here, they'll have to get out because that's where their stop loss was at. See, their stop loss is right here, a little bit past the level. It went past it, $1. And people will, their stop loss will get hit. Then they'll have to get on the other side of the trade. This is why this happens. So, but let's look at it. Did it go up enough to change and give you a new high in the MACD? Let's look at it. So, after a drop, it went up. Here's one inflection point. Went down, went up. Here's another inflection point. Went down, went up. Here's another inflection point. So if you're looking at it, it looks like the MACD is going down. I don't see a new high. I see new lows being formed. What about you? Right? With each upswing, there's new lows in the MACD. So if we were to look at this closely, this strength in the later time frames weakness will hold no weight, because we'll be seeing that if we look at this and be like, there's no new low, no new high being formed here. So it's no reason to get on the call side of this play. The put side is still intact. Now, if the MACD would have been up here going this way, above this inflection point, that's a different story. But it's swinging up, but the MACD is going downwards. So it would be no reason, even though it's swinging all the way up here, there's no reason for us to fear our puts. This is when we should have been adding or averaging down. Because of course, if you're doing puts and the price is going up, the value of the contract is going down. So if you buy them, buy more, you'll be buying them for cheaper, therefore averaging your price down. Y'all seen this in previous videos. Y'all know the song. Y'all know the story. So, and by this time, when it starts to finally exhaust itself with that bullshit strength, your average buying price would be low, and then profit. You dig? And this is where you would have took profit. Actually, right here, I took profit before the level. Well, here's the level right here. Here's a level. But with further examination, yeah. So level was right here. Yeah, so once it dropped below here, like, well, got to here, I would have took profit. Actually, I did take profit a little bit too soon on that play. So I took a $20 loss, made money and lost money at the same time. How that work? But anyway, took profit too soon, but that's okay, because what happened was the parameter stayed the same, and I waited for some strength, and I'm back in it. But we're back in it because the SPY is going up. This broke resistance, and here's the pullback. You know what I said about 3 upswings, 3 bars or more in one direction. Look for a pullback, and this is a perfect example of what I'll be talking about. 1, 2, 3, pullback, and it's a level right here. So 1, 2, 3, broke a level. Here's the pullback. Here's the test of the level. Small consolidation may ensue from here before it continues up and tests. What is this here? 378, 379. So that's where we're going next week with this new high in the MACD, as y'all can see here, from trough to trough. That is a small, make this bigger so you can see that. Down here, from trough to trough, as y'all can see here, it's a new high in the MACD. Here's more weakness. People are buying this, experienced traders are buying this weakness, any weakness to this level or in this area with this new high in the MACD because this is a momentum divergence. People were buying this up to 380. All right. I'm definitely going to send some pullback Monday. Pull back to this level, 372-ish, before it continues up. That's what I see going into Monday. Hopefully y'all had a dope trading week. Hopefully y'all been practicing, because that's the only way you're going to get this thing. Practice, practice, practice. And looking at the charts and thinking, right? So what we basically a recap, what we said happened. This was a textbook momentum divergence. Textbook, perfect. And oh, actually, look what happened. So after the market closed, it closed here, and look, it pulled back a little bit. We're in close, but after it closed, after market, it went up a whole nother $1.30. So it's off to the races already. So I'm looking forward to test 379 next week at some point. You feel me? Momentum divergence, positioning in the later time frame trend. It's your man Don Bucks. If you haven't already, hit the notification bell and the subscribe button, y'all. We're giving it up like this, man. Ooh. And if you want to learn how to swing trade like this, make sure you hit the about section. And feel free to grab the intro to option swing trading course. Pay what you want for it too, man. So I mean, that's how I'm coming. Pay what you can afford to pay. It's like that. All material in the portfolio. It's your man Don Bucks, man. Always remember, ain't no competition. It's always you versus you. Peace.